What is going on, guys? Today is boot camp day. I don't know. It might be 11. That's a lucky number. Let's actually check. Um, oh, chopped right now, bro. What the fuck? Boot camp day. Okay, it is boot camp day 11. Boot camp day 11 is going to be on a liquidity part two, getting back into that trading stuff. Now, I already explained what it is, and there's nothing really much to explain what it is besides the fact that it is resting orders within the market, and it is key levels where essentially the market is most likely going to draw to as it draws on liquidity. Now, this video is going to be going over the draws on liquidity and which are the strongest ones essentially. So for that, let's just keep talking. So draws on liquidity. So liquidity is overall, just understand, it's going to be the market coming to hunt your stop loss or take profit. You have to understand that, for example, a key level, if the market manipulates, it's probably to stop some people out before making the true distribution move and then fill more orders. So let's get into some talking. You guys want to see my trade today? Call it blue bands, y'all, because I made over a band on this shit. Blue freaking bands. Okay, let's come up here. Okay, let's come more up here, I guess. Okay, liquidity. Liquidity, yeah, liquidity. Okay. So we know that liquidity is resting orders within the market. Order limits, TPs, stop losses, partials, etc. So that's the first thing to understand. Now let's understand what are liquidity draws of liquidity. Now this is also called DOL, draw. It's like your draw of liquidity. Okay, so what are these? So let's just make five. These are going to be mine. So the first one is not just mine. This is a known fact. This is going to be data like high slash lows. This one is not an opinion based. This one is a true fact that everyone knows from back testing and just stuff like that in general. That would help if I have my notebook, but what I would personally go with is number two. It's going to be session highs slash lows. The next one I would personally go with would be nlog. Now, what I said is the nlog is called a new week opening gap. So let's actually go ahead. Well, first, I'm actually going to do all these, and then I'll go back to find examples for each. But a nlog stands for new week opening gap. Now, there's also like new day opening gaps, which is ndog. So nlog stronger. Just honorable mention would be honorable mention would be ndog. New day opening gap. Now, number four. Number four for me personally is going to be unmitigated 15 min gaps. For me, this personally has worked well, but you also have to remember that the higher time frame works better. So this could be like this, 1 hour and 4 hour gaps. This is probably going to be one of the top ones for me. The next one, you could just argue that it's just typical, highs and lows in the markets, which it could be. But also, it's just going to be news. It's a target of the unmitigated. But another one I kind of like is I do like to go with internal, like 50 min, 1 hour, 4 hour. But, okay, hold on. This I want to make my five, actually. Sorry, I have to take this call. Give me one sec. Okay, sorry about that. I'm back. I had to take that phone call. Okay, so I actually want to make my four. Honestly, I'm gonna make my three. Analogs are good and all, but I think personally that this is way better. High time frame equal lows slash equal highs. This is by far a great draw on liquidity. Literally had it today, which is what my TP hit to. Now, let's show examples of data wick highs and data wick lows. So let's go over to let's go to February CPI, second week of March, February 11th, second week of March. Okay, so it said it was the 11th, March 11th. So let's actually go replay to that day. It says this was March. I want January CPI date because this should be in February. What day was CPI in February? What's March 11th? All right, well, whatever. March 11th. Let's just go to 9:30, just so you can see the example. Okay, so this was 8:30. This is called a data Wakai. So now if this is our data Wakai, number one draw on liquidity, what we are essentially looking for is the data wick low. They get swept. Good. So now what we're looking for off open would be to take this. Usually we would like to see some maybe a move lower so we could get a better entry, but you're not always going to get that. And that is the truth. So now let's go ahead and just play one candle. As you can see, the next candle took it. Like that's how easy it is. Obviously, you wouldn't have been a trade as that was the open, but you get the point. Data wick high, that is the best draw. Data wick low, same thing. Those are the best draws you're going to get within the market. Okay. Now let's show you the session highs and lows. Literally, I don't even have to replay. I'll just show you an example from literally today because it happens every single day in the market. Where's my? I had them drawed. Now let's just put them here, I guess. I'm getting spam, sorry. So let's go to M. So what do we have? So unfortunately, they are gone now, but pre-market, what we had was see, no, here's an example right here. We had NYPM. There's also stacked Asia lows, which was the trade. But as you can see, it's just like where price draws to. And I promise you, right now, we're probably drawing towards these. So that's going to be the two. Now, the third is going to be equal lows and equal highs. So this is actually why I took my trade off today. So in particular, it's going to be the high time frame ones. But look, if we go on the 4 hour here, or it might have been the one. But yeah, see, we had equal lows. So these got ran through. Same thing about equal highs. Sometimes maybe we'll have equal high, like these are relative equal highs, same thing. Now the fourth is going to be NWOGs. Now let's see, NWOGs and DWOGs. So this is when the new session opens up. So this will happen on Sunday at 6 p.m. There wasn't one this week, so let me go to the prior week. Okay, here we go. Yeah. I didn't know if there was one this day either, but market opens at 16 o'clock. Or it might be 18. I'm pretty sure it's 16 now. So yeah, it's gonna open right here on Sunday, and usually we will create an NLOG. So for example, if price, let's say, is down here from Friday, and the market's closed, when it opens up on Sunday, price may open up here. So in the NWOG would be the candle of the new opening to the last one of last week's. And this is just a huge imbalance that price is likely now to come down at least draw two. If not, usually we like to fill it that night or not. So a 90% statistic that it'll get filled within the next few days. So that's that. Now I don't remember what the last one was. I think it was actually the unfilled gaps, right? Yeah, so unfilled. So now let's go to an example of I literally targeted one today. What do we have on the 4 hour time frame? On the 4 hour, we have look, this would be a unmitigated 4 hour gap. See, no candles that previously came into that gap. What about the 1 hour? Same thing on the 1 hour right here. Sure, price is going to about to hit it. 1 hour unmitigated. I actually took my trade based off this today, as it's a great retracement tool to see. So 15-minute, this is my favorite. This just got mitigated. All right, so for example, if we go back, let's go back to like here. No, select bar. What the frick? So if we come back to here, this is what we're seeing. So now, if we go on the 15-minute, what do we have? We have this unmitigated 15-minute fair value gap blow. This is a strong place to price to draw. So how would you take a trade off this? You would do one of two things. Now let's go to the 1 minute. So off of this, I believe it's this one, you would either say this. Well, you think we're reversing off of something, so maybe you look for like right here, you get an inverse, you get a retracement to a gap, and then a SID, and then you would enter here, stop would be like here, and you would just target this unmitigated. That could be one thing you do. Or if your bias is bearish, right, like mine was today, you could wait now for price to come into this gap. So now we tap this unmitigated, and then you can wait to see the reversal. So then go short. Or maybe we inverse it, and now your bias is long, and you're waiting for a retracement, break structure, all that. That is another way how you could trade it. And I'm actually going to show you today how I took my trade based off that. So let me go over to MNQ, which is what I took it on. Let's get that shit out there. I gotta do this. Hold on. Make it two, or else it won't pop up. Yeah, here it is. Okay. So now let's go into that. So this was the trade I took today. Nice 100-point move, give or take. Now, what was the purpose of this? So my bias to start was very short. What do you see here? So what I had marked was actually equal lows. Like I said, the strongest draw, it is higher time frame holds higher power. So especially when they're the higher time frame, they're just going to hold so much significance. Anyways, so I took the higher time frame. And I knew I was bearish, right? On the 15-minute, we're still respecting. Where the hell did we just go? We're still respecting, all my levels. See, like unmitigated, unmitigated, unmitigated. Now we're actually inversing this, so we could probably expect to come up now. Anyways, so during this time, this was a 10 a.m. move. So there we had the accumulation, then we manipulated higher. We manipulated higher on the 10 a.m. candle into this 5-minute fair value gap, and then I saw that we were hugely rejecting off it. Now, off of that rejection, I entered. You're not always going to get the perfect play, but I entered. Was we had a nice S&T. We rejected off of that. We were showing queen displacement lower, and then we got a SID right around here. Waited a few more candles, and I actually entered right on the SID. Unfortunately, obviously, as you can tell, we went into a lot of drawdown on that. But then blue bands caught that. So those are going to be your biggest draws on liquidity. Those are these five biggest. That's where the market is going to order. Now, those can be used as TPs. Those can be used as just direction for conditions. But what I will say, when you're fading a setup, you never want to use those at your stop losses. You want your stop loss to be protected. For example, if your stop loss is on a 15-minute unmitigated internal low, you're going to get cooked. That's where price is likely to draw to. It's not protected. But let's say, for example, your stop loss is where we had just tapped into that now mitigated 15-minute gap, and we reswept the internal high in that, and we formed the protected high. Well, then that would be a good place for your stop loss. Anyways, like for example, that literally happened to me. So what do we see here? We see a gap, right? I don't put my stop here because obviously we hit it. When we hit it, formed the high, reswept it. Now this should be protected, right? My stop was there. As you can see, it was protected. Bang. So that is how you are pretty much going to be trading these. Now, I believe that these videos were around 15 minutes, but that was liquidity part two. I do not know if I'm going to do another. I might not. So I want you to start putting together confluences. I want you to start seeing liquidity sweep, the trend, and start doing your homework. Now, the other homework for this video is I want you to just go identify 5 examples of each of those 5 liquidities I marked out, being data wick highs, 5 examples, data wick lows, 5 example. Sessions, Asia, London. Those are the two odd folks. With the AM is fine too. Also, the true day open, the previous day high and low, and the 9:30 wick. Those are all stronger draws as well. Now, with that said, I also want you to do, like I said, the NLOG, DWOG, or well, NWOG and DOG. And I also want you to do the equal lows, equal highs, unmitigated, mitigated. Just start playing out with it all. And that is your homework for the day. With that said, this was day 11. Peace.